We take what the actual tax code says and the bill says, and then we try to turn it into
Yeah,
English.
we try to make it English for you guys. Employers with education assistance programs can also pay down employees' student loans, and the employee can exclude that income amount from taxable income.
Small changes make a big impact over time.
It does sound like a very promising opportunity to start investing for young children.
Hello, welcome back.
Hello, good to see you as always.
So good to see you too. Welcome back from vacay. Cannot
Thank
wait to hear
you.
all about it.
It was very hard coming back, I'll be honest.
I am offended to hear that. No, I'm just kidding. I know we cannot compete. It's fine. Understandably so. All right, y'all, we'll get to Atrisa's vacay, don't you worry, but let me just go ahead and welcome everybody to episode 65 of Living Richly with Curo. My name is Anne McCabe. I am the CEO and a partner here at Curo Private Wealth. And I'm joined, as always, so grateful that Atrisa returned from vacation. Atrisa Roberts.
Hi, I'm Atrisa Roberts, COO and partner here at Curo, and I did return, so no worries.
She did. There was a question, but she made the right choice.
I made the right decision.
Returning. Thankfully, we're all grateful that you came back to us.
I'm happy to be back. Well, I'm happy to be here with you. I could use a few more days on the beach, but
I'm sure. Good. Yeah, I'm sure you weren't like, okay, I'm ready for that to be over. Not surprising to hear that. Well, if this is the first time you are joining us, warm welcome and thank you so much for spending some time with us. And of course, our OG listeners and viewers, we adore you and are grateful to you as well. So thank you for choosing to give us your attention and your time every week, which is a massive asset. So we appreciate it. And our goal here, actually, in what we do every day with clients, as well as on the podcast, is to educate, inspire, sometimes entertain you, but certainly empower you on your financial journeys. So today we will be delving back into the 870-page OBBBA. We're just going to call it OBBBA from now on because who has the time to list it all out?
No.
So we're gonna, deep dive into more OBBBA. Last episode, number 64, we started off with some of the more straightforward changes that came as a result of OBBBA, and today we're going to dig in even more. So before we do that, we'll do an A-team catch-up, and also reminder that 84% of you who listen to us every week still haven't subscribed. I don't know what's going on. I don't know why.
What are you doing?
I don't know. What's wrong? Just like click the button. If you've ever gotten value from every single week that we show up and try to share knowledge and information, just wherever you listen or watch, just subscribe. We would really appreciate it. It would greatly help us and it will help us continue to get you good content.
Yes.
Please and
thank you for your cooperation.
Yes. All right, enough about that. Let's do an A-team catch up. So y'all, even though Atrisa and I work together, and she got back to the office technically yesterday, I have no idea how her vacation went. So we are all going to be listening to this for the first time because even though we were in on 2 meetings together yesterday, we actually didn't even have a chance to catch up, which is crazy. So how was it?
It was fantastic. 10 out of 10. It was my first trip to Aruba, surprisingly enough. But I would absolutely go back. And I am normally, I tell people I'm normally a person who likes to take trips. I like to travel. I very rarely just do vacations that are kind of like nothingness. But the intention of this trip was for it to be just some days to relax, decompress, and that's exactly what it was. The weather was absolutely beautiful. Highs of about 85 or 86 every day, no rain other than like a few showers. I think we got on Friday, but very light, like summer rain kind of showers. Apparently, we were in the off season for Aruba, so the island wasn't as crowded. You could, move around very easily. We actually rented a car on Sunday, which I
Oh,
never do when I travel.
yeah.
But we rented a car because we wanted to drive down to San Nicolas and Baby Beach, which is kind of at the southern tip of the island. And so we were able to drive down there in about 20 minutes. Beautiful crystal blue waters. I mean, it was absolutely beautiful. So if
Hmm.
you have not been to Aruba, I would highly recommend. Everyone was so friendly. It was so easy to drive. They actually stop and let you pull out into traffic. I'm like, as a person who drives
Oh,
around the DC Metro every day,
yeah, that does not happen frequently,
no, does not happen
if
often.
ever.
Right. So it was very nice, very laid back. Got time to just, sleep in, take a nap in the middle of the day if I wanted to, not get dressed if I wanted to. So it was fantastic. The food was great. Um, Probably ate too much, probably drank a little too much, but the
I
calories
mean,
don't count on vacation.
tis vacation. Tis
Calories don't
vacation.
count on vacation. So yeah, so it was a fantastic trip. Absolutely had a great 4 days. It was hard getting off the plane back at Dulles
Yeah.
after being in such a beautiful location for the previous 4 days. But I'm happy to be back. It was a nice trip. We made it back safely in one
Hmm.
piece, feeling somewhat rested and relaxed. So trying to carry that energy in through the rest of the summer.
Yeah. And Aruba meets your criteria for trips. What is it again that you have like rules about destinations?
Yeah, well, it depends. So the rules for this one was just I could get there in a direct flight, right?
Hmm.
So nonstop out of Dulles. It had to be less than 5 hours. I think this one's
Hmm.
like 4:15. And then it just had to be easy to navigate. Normally, like when I travel to places, I try to learn some of the language just so that it makes it easier to get around. I mean, in Aruba, USD is widely accepted. Everybody there speaks, I mean, I think the locals speak 4 or 5 languages, Dutch,
Mm.
Spanish, English, even some Portuguese. So you could communicate with everybody. It was just a real easy, relax. I didn't have to do a lot of preparation to get there like I
Hmm.
normally do when I travel, and that was the key. Like I wanted it to be
Yeah.
easy breezy, and this was exactly that. I didn't have to order foreign currency. It was
Yeah.
just such an easy trip, which I appreciated.
Yeah. That's awesome. And no
Yeah.
flight delays or anything like that, which is always
Had a
nice.
delay coming back
Oh, you
due
did?
to yeah, but about 45 minutes we boarded with
Oh,
no problem, and then we sat at the gate for 40 minutes while they worked out some maintenance issue. So that's never fun to hear.
no, no.
But went smoothly, made it back with no issues.
And you didn't have a connecting flight, so it wasn't a huge
Right.
deal. Yeah.
Yep. So, and then I got to do
Nice.
customs on the Aruba side. So I didn't have to do customs at Dulles, which if you've ever been
Oh,
through customs at Dulles can be a pain. I mean, I
uh-huh.
have global entry, so it's easier, but it was just nice to be able to land and go right to baggage claim and leave.
Yeah, that's really nice.
Yeah.
All right, everybody. Aruba, add it to the list. It's going on
Yep.
my list.
It's
Never
it's
been there.
beautiful. Super easy trip to plan and to go. And if you go in around June or July, apparently it's off season because they do carnival
Yeah.
earlier in the year. So their high season is like February, January through I think like April. But you
Okay.
still get really great weather, just a little more quiet and relaxed on the island, which is what I wanted.
Yeah, that's so nice.
Yeah.
Yay. Happy
Yay.
for you and happy that you're back.
Yeah, thank you. Happy to be back with you, partner.
Thank you, partner. So
All right.
sweet.
Tell me what I missed. What's going on with you?
Well, I took goalie on Friday night to a rodeo in Loudoun County. It was so fun. I
There are
know.
rodeos?
Super. That's what I said. That's what I said. Super random. So I was meeting with clients a couple weeks ago and I was telling them about our Dude Ranch trip. And I was
Mm-hmm.
joking with them that I threatened to my family that I'm going to join the rodeo. Like I'm going to join the rodeo circuit. And they were like, oh, Loudoun County Fair, which goes on, I think it was like, 2 weeks. It ends, the last night has a rodeo. And I said, I had no idea. I didn't even know Loudoun County Fair was a thing. I've never been. So I
Mm-hmm.
looked it up and sure enough, Friday night, there is a rodeo. So goalie and I went and we had an absolute blast.
I was
I
about to
had
say, how was
never
it?
so fun. So fun. It was terrifying. Like these bulls are no joke. And when
Yeah.
the riders, the rodeo riders get
Mm-hmm.
bucked off, I was like terrified that the bulls were gonna, stomp on
Yeah.
them and or stab them with their horns, which is what they're trying to do. Anyway, so as a mom, especially because there were some younger kids who did it. So as a mom, I was freaking out a little bit,
Like, please
but
don't
it
terrorize
was,
my child. Please don't traumatize my
yeah,
child.
exactly, exactly. And these little nuggets getting on these bulls, I mean, it was kind of crazy. It's a whole cultural, I love people watching. It's
Hmm.
a whole cultural, like fascinating people watching. And then in between, there were like two rodeo competitions, and in between there was barrel racing. So these are
Okay.
female
Hmm.
horseback riders who do barrel racing, which again I had never seen in person either. And so that was super fun to watch, the barrel racing. So it was great. It was lovely one-on-one time with my teenager, which doesn't happen, as much as I would like. And it was a new experience for both of us. And it was just super, super fun. So now
Oh,
we
that's
know.
so exciting. Yeah, now we
Yeah.
know. I didn't realize that rodeos were a thing here. It's actually one of the domestic trips on my list is to go to the rodeo in
Oh,
Houston.
okay.
Um, I haven't been yet, but so I've never been to one, but I had no idea that it was even a thing you could do in our area. It's also one of the things I love about living in this area. You never know what you can kind
There's
of stumble
like,
upon.
exactly. There's like pretty much everything. Yeah,
Yeah. So
for
what did
sure.
Goalie think? Did he like it?
He loved it. Yeah. He
Okay.
was like, that's so cool. I mean, yeah, we were both just like fascinated by, and it's fun too because there's the commentator and then, there are the clowns that are there
Hmm.
to help try to distract the bulls. And there was like funny back and forth as the riders were getting prepared and, about to be released. The commentators and the clowns would kind of go back and forth, almost like a little bit of a comedy show. So the whole thing
Okay.
was just
Yeah.
very entertaining, and yeah, he loved it. And then of course the rest of the family who was like, no, we don't want to go to rodeo, they're all jealous now, and they're like, man, I'm like, next year.
Yeah.
Next year we can go back. So Goalie was a smart
Ooh.
one.
Did
Yeah.
you wear your boots?
I didn't even know that. I know it wasn't even on my
And
radar.
okay, you guys
I
don't know
know.
this, but Anne has a great pair of cowboy boots that she rarely gets to wear.
Rarely. Truth. As we arrived and I saw all the ladies in their cowboy boots, I was
Uh-huh.
like, oh no, I missed an opportunity.
Dang.
Now I know. But see, this is my first experience. I was a
Yeah,
complete
you'll be
rookie.
prepared. You'll be prepared the
Yeah,
next time.
next time for sure.
Fun.
So it was super fun. Super fun. All right, shall we talk more OBA? I know that's just what you and I want to do
As
is
I say,
talk more
speaking of
OBA.
fun, speaking of fun, let's talk about tax
It is
law.
it has been all encompassing for the past since July 4th, since it was
Yeah.
passed. But one of our jobs as advisors
Hmm.
is to read through the law and make sure we understand it and hop on webinars and listen to experts and read experts so that we can give our clients the guidance and the best advice possible. So here we are. So today we're
Yeah.
going to dig in, as I mentioned, into more of the provisions of OBA, the ones that we did not cover last week. And as a reminder, this legislation was 870 pages. So, of course, in 2 podcast episodes, we are not going to cover all the things, but we have pulled out the aspects that we think potentially impact the majority of our clients and the majority of our listeners. So that's just my caveat.
Yeah.
The other caveat I will share that we mentioned last week is we are going to tell you about some provisions that are quote unquote permanent. And just take that with a grain of salt because they're permanent until some new president comes in, slash a new administration, and Congress decides to change the laws. So there are some provisions that were more campaign promises that do expire
Mhm.
around 2028 when President Trump will no longer be president. But when we say permanent, just know it's permanent-ish. There,
Yeah. Permanent-ish.
permanent-ish. Exactly. All right. So I will start with mortgages. So there were some modifications that were made to mortgages with the TCJA, which is the Tax Cuts and Jobs Act, which was passed back in 2017 during President Trump's first administration. And the OBA that was just put into law on July 4th made some of these provisions permanent. So one of the things that was changed through the TCJA was there was a reduction in the amount of interest that accrues on mortgage balances. And it went down from $1 million in balance down to $750,000. So now interest is deductible up to a balance of $750,000. So that was made quote unquote permanent. The deductibility of mortgage interest that is not attributable to home improvement or to new acquisition of homes is still not deductible. So in other words, it used to be that you could take out a home equity line of credit to say pay off credit card bills or to buy a car or to fund a vacation, right? There was a period of time when people would tap home equity lines of credit for lots of things. And there was also a period of time where that interest was deductible. That is no longer the case. So now in order for it to be deductible, it does have to be for home acquisition or improvements on the home. And then one new thing with OBBBA that was restored was the deductibility of mortgage interest premium. So this was something that had lapsed, and with OBBBA, they brought it back.
Yeah. Good fun on the mortgage rules.
Yep.
Okay, so the other update for or made permanent-ish by OBBBA was regarding student loan discharge. So during the Biden administration, cancellation of indebtedness or COD income attributable to discharging a student loan was max excludable from income through year end 2025. So any income you received that was received in an effort to pay down student loan debt, if that makes sense, was max excludable from income through the end of this year. So the bill extends the COD exclusion permanently-ish for discharge of a student loan account, on the account of death or disability. So that exclusion from income of that COD is now permanently excludable from your income from a taxation perspective due to death or disability. Employers with education assistance programs can also pay down employees' student loans, and the employee can exclude that income amount from taxable income. So OBBBA makes that permanent and also indexes the amount for inflation. So let me try to rephrase. For many employers, they have an employee benefit where you receive some income to pay down your student loan debt. That income is not included as taxable income to you up to certain limits, and that limit amount will be indexed or will increase every year for inflation.
Yeah. Nicely paraphrased. We take what the actual tax code says and the bill says, and then we try to turn it into English.
We try to make it English for you guys.
We do. Try to make it English. It's hard, y'all. The struggle is real, but we try. But that's cool. We actually, our corporate partner has a program that helps to pay employees student loans, which is an awesome benefit that we love, especially telling our younger team members about. And it used to be that income was included as taxable income, which was, It just reduces the benefit, still a benefit, but reduces the impact to the employee. So I think that was a great change there. Okay, we are now going to talk about the Trump accounts. These have gotten a whole lot of attention because they are new. So we're going to break down some of the characteristics of these new accounts, and we're going to share at least what we know. So these new Trump accounts, think of them as sort of like an IRA. They're tax exempt, similar to an IRA. And there are certain rules associated with them. So first of all, the beneficiary for the Trump account may not have attained age 8 at the establishment of the account. In English, they have to be not 8 yet. So 7 and change is fine, but they cannot have turned 8 yet. So my little Messi, who just turned 8 in the end of June, he's off. He's out. Yeah, he's off the Trump account payroll. Darn. So that's a bummer. Contribution limitations or limits. So cash contributions are going to be accepted into these Trump accounts beginning January 1st of 2026. So even if you wanted to start one of these things because you've been reading about it or you've heard about it, not quite yet, cowboy, hold your horses. It will come the beginning of 2026. The contribution amount right now is a $5,000 per year max. It will be adjusted with inflation. So just like we get a bump to our 401k contributions and our IRA contributions most years, this too will have an increase in that contribution limit. The government will seed this account with a $1,000 one-time contribution if you opt in for individuals or for babies born from 2025 to 2028. So if you had a baby this year, then they will qualify for this $1,000 contribution from the government. You are not able to make any further contributions once the beneficiary is 18. And employer contributions can also go into this account and they are excluded from income. So just like Teresa was talking about with the student loan, debt payment, this is excluded for income up to $2,500 per year. There are limitations in terms of the investment options. So the investments must track a well-established US index. So when it comes to diversification, we always talk about diversification and that being a benefit from an investment standpoint. You won't be able to have things like international stock or emerging market stock in this sort of account. Now, in terms of where you should be able to open these accounts, we're not exactly sure yet, but it seems like possibly at your bank. It also seems like possibly with someone like us, with a financial institution or with your financial advisor, or with one of the large organizations like Fidelity, Schwab, that kind of thing, and you can self-manage. But we are waiting for further guidance because this is a brand new account. So as with any brand new, investment products that hit the market, it's going to take a while to really fully understand all the bells and whistles.
Yeah, but it does sound like a very promising opportunity to start investing for young children. We talk a lot on this podcast about the power of tax deferred or tax, exempt earnings on investment accounts. So again, once we have more information, it may require a whole nother episode to explain it.
Yeah.
But once we have more information, we'll be sure to pass that on to our listeners and viewers. Okay, so in the same sort of vein of thinking about youth accounts, there has been an expansion to eligible expenses for 529 plans. So as you may already know, with a 529 plan, you make contributions that again grow tax deferred or tax exempt. And then any distribution you take for a qualified expense is taken tax-free. It's what we love about the power of 529s. So in the OBBBA, it expands those eligible expenses for elementary and secondary school expenses like books. So there was already an adjustment made where you could use up to $10,000 a year from a 529 to cover private school K through 12 education. Now the OBBBA allows you to make qualified distributions for elementary and secondary school expenses like books, or if your student needs something special, K through 12. This applies only to distributions made after the bill was enacted, which is July 4th. So if you made any distributions prior to that date, that will not qualify, but any elementary or secondary expenses paid for out of 529 plans after July 4th are now eligible as qualified expenses. And also, as a note, the OBBBA actually expands the maximum that can be taken out for K through 12 education from what was previously $10,000 a year to now $20,000 a year. And for those with students in private school, especially in the DC metro area, that is a huge lift to be able to take more money and can attest from 529 to help cover those expenses. So that was another change due to OBBBA. It also expands to include certain post-secondary credential programs. So we're sure this includes state and federal programs like the bar exam. We're not sure about professional designations, still waiting for further guidance on the limits from the IRS on this point.
Yeah. So if you are like a certified financial planner, like a
Mhm.
Teresa and I are, we're still kind of waiting to see if those sorts of things would qualify. So lots more guidance to
Yeah.
come. Okay, so there were a few changes to charitable deductions that we wanted to go over next. The first is there was a deduction that was reinstated. This was actually introduced back during COVID, and it is called an above the line deduction for non-itemizers. So this means you are taking the standard deduction, you are not itemizing on your tax return, and you may take a deduction of up to $1,000 if you are a single filer and $2,000 for married filing jointly. And this does go into effect starting in 2026. So that's nice because most times only folks who itemize are able to really take advantage of charitable deduction. So that's a nice reinstatement there. On the flip side, there was a floor instituted for itemized charitable deduction. So these are folks who itemize, don't take the standard. And the new limitations are that contributions must exceed 1/2 of 1% of your income, basically your taxable income base, to be deductible. So for example, if your income is $500,000, you cannot deduct the first $2,500 for charitable gifts that you make. So you would have to make over that amount. Let's say you gifted $5,000, then $2,500 would be your deduction. So this new floor is a new provision that was instated.
Yeah. Very nice. Promote some more charitable giving, even for the non-itemizers, which is a nice touch.
Yeah.
Okay, so now for business owners. This is regarding qualified business income, or what we call QBI, or if you know the tax code, the 199A deduction. But it it makes
We do,
the
because when we were on Capitol Hill that day, we were talking all about the
all
199A.
about the
Oh my God. I was like
199A. I know
I was like dreaming about 199A at the end of that
know
day.
so much about 199A now.
Yeah.
But it makes the 20% QBI deduction permanent ish,
Hmm.
as well as increases the phase out range. So, for example, if you made $100,000, you would pay tax on only 80,000, which is nice for business owners. So, the bill also includes a minimum deduction of $400 for taxpayers with at least $1,000 of QBI from one or more active trades or businesses. Now, this will be available in 2026. So normally the 20% exclusion would be only $200 of $1,000. That's simple math. But the minimum deduction in that case will now be $400. So for qualified small business stock exclusion, so now under the current law, the 100% exclusion is available after 5 years for qualified small business stock. But this legislation added a tiered exclusion percentage for business sales occurring after 3 years. So the tiered exclusion after 3 years would get 50% excluded and not the full 100%, but still added some exclusion in that case. It also increases the exclusion from $10 million to $15 million, and this is only for C corporations. So for all the business owners, please take note of some changes that OBBBA presents for the way you handled qualified business income, as well as qualified small business stock.
Yeah. The QBI thing I think is cool, especially the
Mm-hmm.
minimum deduction, especially for like folks who are working and have a W-2 salary, but then maybe they do a side hustle, right? And so they're
Right.
generating some business income from their side hustle. So I thought that was a nice little hat tip for the side hustlers out there.
Yeah. We love a good side hustle.
We do. We do. All right, folks. Well, that wraps the OBBBA review. We are going to have Shauna, who is the tax goddess we had on a few months back. We're going to have her on in August to talk a little bit more about how they are doing tax strategy for clients under OBBBA. So keep an eye out for that. But this is going to be the wrap on the OBBBA summary with again, the most important, we think, provisions and changes that impact the majority of our clients and our listeners. And stay tuned because as we've mentioned multiple times throughout this episode and last episode, we will wait for further guidance from the IRS on what it all means and how it's all going to work. So we'll continue to keep you posted as we get more information.
Always exciting to talk about tax law.
I know.
But
Always important
it's
to keep up
helpful.
with it.
Yeah, you got to keep up, got to keep you informed. It's our goal here.
Exactly. For sure. Yeah. Because well-educated and informed clients make good, sound decisions, which is always our goal.
Yep.
To help people make good, sound decisions. All right. So what do you have as a closing thought for us today, Atrisa?
I was thinking about this one. I'm still in my vacation brain, and just thinking about how meaningful that time was to me, not only to spend the time with my sister, which she and I are both so busy at this point, we kind of have to like schedule time to see each other now, which is just odd, seeing as how she lives in DC and I'm right here in Maryland. But so spending that time and having time to just decompress and intentionally turning off the things, which we talk a lot about, like being too present with like what's happening in the political environment and the market environment and, taking in too much news. But what we do here at Curo is always ever present for me. And so it's hard for me to turn off that thinking, to not want to check in on email, to not want to check in on Teams and see how the things are going. So I had to make an intentional effort to turn it off, to not think about it, and really try to maximize the time away. It was only, a long 4 days. So I wanted to make the most of it, but it was so refreshing to be able to just kind of wake up and not have to consider all the things, right? Other than where do we go for breakfast this morning and do we do the beach or the pool, right? So just want to highlight the importance of that, right? The importance of being able to take time for yourself to decompress. And hopefully you're in a situation like me where you have a great partner and a great team, great family who can support you in a way that you can take that time to turn it off and just kind of reset. I think it just goes a long way in helping me prepare for like our upcoming busy season in the third and fourth quarters, which also, gets really ramped up for us as we approach the end of the year. And to be able to walk into that time feeling slightly refreshed, right? I mean, another 3 days would have been great, but it was refreshing to just get lots of sunshine. I probably had more sun in the 4 days than I did all summer or maybe even all year. So just to soak in so much sun and fresh air, to be outdoors most of the day, it just felt really nice to do that. So just encouraging our listeners and viewers to not be afraid to take some time to turn it off.
Yeah, I love that. It's so important. It's like all about recharging your batteries, right? Because you can't give from an empty cup. And if your cup is empty, you're not going to be any good to anybody, right? So it's super, super important. So I'm glad you took that time. I wish for your sake it was longer, but
no,
everything was fine here.
Yeah, and that's always the best part.
Yeah.
Yeah, that's the best part, to be able to turn it off and then not have to be concerned that you're coming back to a fire drill, right?
Yeah.
So coming back and you just kind of ease back in and everything's fine.
Yeah. And that's one of the reasons that our team approach is so lovely and valuable for everybody, because we really can go away, disconnect, and know that everything's taken care of. Our clients are taken care of. If they need something, they'll get it. They don't have to wait until we're back, or we don't have to get, interrupted on our vacation when we're trying to decompress. So, yeah, that's awesome.
Yeah.
Cool.
Right, so how about you? What do you have to share with us today?
I think I may have mentioned this concept early on in our podcast. I can't remember if I did, but I have been reading again about Kaizen, I think is how you pronounce it, the Japanese principle about continuous improvement. So I know that I'm learning about it again in a book that I'm reading, and they're talking about Toyota and how, Toyota, the culture at Toyota, they embrace the Kaizen philosophy. They also talked about Tiger Woods, and, say what you will about him personally. He was a phenomenal golfer, is a phenomenal golfer. So I've been thinking a lot about that, and just the principle of, instead of trying to find this massive, boulder that we're going to try to push up a hill, or these massive changes that we need to implement, and whether it's in our businesses or our lives, just finding like little tweaks, little things here and there, trying to improve by 1% every day. And the things that don't seem like a big deal because they're small, you compound those and you bring those together, and over time they make a massive impact. So that's been on my mind a lot from, our firm standpoint, and just me personally, just trying to get a little bit better, and just try to identify like small things that we could be doing better on a daily basis. So
Yeah.
that is my thought of the day.
Thank you for sharing that. You've really tapped in to that side of you, what you shared about your meditation and blocking time for that, to really just be in touch with yourself. I'm very excited to hear how that transforms your life. I'm sure it's already being transformed in many small ways. But that's a good thing to remember, for all of us, right? That just even the 1% improvement every day is something moving us in the right direction.
Yeah, exactly. Small changes make a big impact over time.
Yep.
All right, y'all. Well, that wraps us for the week. Thanks again for tuning in, and we will see you back here next week for another episode of Living Richly with Curo and Helen.
Live richly.
Thanks again for tuning in. If you enjoyed today's episode, please be sure to subscribe and share it with someone who might benefit from it. Friendly reminder that this is for informational purposes only. For additional information, please visit us at www.curoprivatewealth.com. Until next time, live richly.